It's been about 3, almost 4 years, and in today's video, I want to share the good and the bad from financial Twitter, Fintwit. It all started back in 2019. I started getting into penny stocks. I started getting into Discord groups, and I started getting into trying to figure out different trading styles and strategies. So you start following people, you see someone on a podcast, you listen to this, listen to that, and next thing you know, you're down this rabbit hole. You start following them on Twitter because they're telling you that they're calling things out for free on Twitter. Then you join their Discord, you're paying $100 a month on their Discord, and next thing you know, you're thousands of dollars into trading Twitter, and you've essentially invested everything, but you still can't make a dime, no matter how you slice it. Fast forward, we have the pandemic, we have massive surge to traders and all this crazy stuff, the Atlas traders who ended up scamming all their followers, pumping and dumping penny stocks, and now they may be headed to jail, some of them, I don't know. There's a whole deal going on. I got a video on that from a long time back if you want to learn more about what happened with them. But if you are familiar, you've probably seen them, listened to them, or dare we say, taken some of their calls over the past couple of years, or people who are similar to those guys. So I want to go over the good and the bad, and I'll kind of go back and forth, and you'll start to see as we go back and forth that one side does have a bit more, in my opinion, to it. First things first, we'll start with the good. The good is that you can get great ideas. When it comes down to financial Twitter, you can follow people from macro investors, macro strategists, to people that you watch on CNBC. Jim Cramer, I guess if you want to follow him, you can follow him. You'll see what he says. Now that it's called X, I know I'm already maybe dating myself by saying Twitter. I don't know. But that said, great ideas can come. Traders look at big picture charts. You can look at people who are fundamental analysts and stuff. And they don't have to have the CNBC tag next to their name. They could be someone that does it for themselves and claims to make a ton of money, or be a multi-millionaire investor, trader, this, that, and the other thing. And you might find good ideas there. You might copy their ideas and they might work. And I'm sure a lot of us who have experience with that stuff know how that slope goes. But going on to the bad side, you also get the pump and dumps. And that's what I alluded to in the beginning. The whole Atlas scam really was, these guys would buy a lot of these cheap companies, penny stocks, where there's only so many million shares available. And think about this, a penny stock, a stock, or we can even call stocks that are sub $5. People will even call those penny stocks. A stock, it's $1, right? Only has, let's say, 100 million shares available to trade. Well, do the math. You start buying a couple 100,000 shares, a million shares, dare you say, with larger accounts, and that's going to move price compared to, look at how many shares available of Apple there are to trade, and how much volume that thing can see on a given day, or even on a given couple minute span. So when you have stocks with low floats, shares available to trade, and people who are loading up and starting to buy up some of those shares, now there's even less shares available to trade, and then they have big followings. They tweet something out, hey, this stock looks really good, it's about to bounce, or they got this catalyst coming up. Could be absolute utter bullshit, doesn't fucking matter. And now all of a sudden, so many people come flooding to buy it, hitting market buy at the exact same time, those things can spike right on up. And so a lot of these people, and now they're getting into trouble for it, were caught red-handed where they were doing that and buying these stocks, then posting about it on Twitter, shortly after or days after, and they would pump the price and they would lock in their gains. And for them, when you're playing with a couple 100,000 shares, right, 5, 10, 15, 20, 30 cents is a pretty good move. Let's lock some of that in. Let's go buy a new car. That's how things worked, which then was an investment back into their following, because then when they buy the new car, more followers, more people see, hey, this person knows what they're doing, I'm going to follow them. Same thing repeats, process repeats, and they can keep scamming, if you will, people by just pumping and dumping stocks right in front of their face and right into their mouth, like they don't care. They are making tons of money. So there's that side, and you don't know the intentions. It's a screen. It's text. It's some video. You don't know the intention behind who's posting, and so that's one of the bigger bad pieces. But there's actually, I really think, a much larger negative side to this that I'll get to in a minute. Next, on the good side, the education. You could follow people who have great education, and This goes for anything. When it comes to whatever you want to learn, social media can be an amazing resource if you follow the right people and you're looking for the right information to learn things. You can learn from doctors, you can learn from professionals, you can learn from anything, anyone. You can also learn from people who are not necessarily telling the truth, and that's where we go to the bad side again and you find the lies. And on top of lies, there's lack of transparency. So people could be blatantly lying to you, like the pump and dumpers, and then people could also be faking their P&Ls, faking numbers, making up lies about why this company is so good and why you should buy this or why you should sell this and why you should do this. And that's not helpful because you trust them, or at least you think you do, and now all of a sudden you're being lied to and they're taking full advantage of you. Back to the good side, sentiment and the pain trade. Now, this is actually really interesting. So if you follow enough people on social media in the financial space, you'll get a really good sense, people who post content and who like to react to news and to kind of like what's currently going on. You'll really get a good feel pretty quickly by logging in for like a day or a couple days, watching some of the latest videos by the biggest names, biggest accounts in the space, and you'll know where the bias is, bearish or bullish. They might not say it specifically, but you'll get a pretty good sense from headlines, from the way people are phrasing things, how they're framing their videos. They're gonna tell you their bias will 100% rub off into the video. Whether they like it or not, whether you like it or not, whether they say that they're biased or not, it's going to happen and you can get a pretty good feel, right? So when you see that, what's really cool about financial Twitter and just social media in general, it's a lot. The past couple of years, the past like year and a half has been really interesting to see that when everyone gets one-sided, we're close to a reversal, right? When everyone's super bearish, and people were bearish for so long, thinking that the market was going to crash back in October down to even much lower levels. And guess what? The market bottomed in October and it rallied massively from October to like July of 2023. From October 2022 to July 2023. But guess what? From October to like February, March, like people were like, no, the lows are not in. The lows are not in, and it's gonna go down. And again, there was a lot of people who were overwhelmingly negative back in October, back in even November, December. But when we had that, it starts to make, at least in my head now after seeing it, a light bulb goes off. Like, hey, a lot of people are on one side of a trade here. And it's clear on social media. It's also clear to see the painful trade, right? So when people are complaining, right, there's a lot of complaints about this, and this, interest rates, this, the stock market, that. Well, when people are complaining that rates are going higher or that their stocks are going lower and this sucks, like many times, like that painful trade will continue and they'll continue to get burnt until they finally capitulate and give up. When you see more of that, it's time to start thinking about the other side, the upside, right? And the same thing on the flip, right? When everyone's getting back in the market, getting long again, back in, July, August, guess what? The market rolls over and people are like, ah, shit. Well, guess what? You had, 6, 7, 8 months of rally that you missed out on. Now, you dumbass, you get bullish. Like, what are you doing, right? So things like that could be helpful. By no means is it a guarantee, but it's a good way to gauge sentiment. And when everyone's crying about this or crying about that or complaining about this, complaining about that, like it's good to know to start to understand where the next move may be and where the money is going to be as people capitulate. So we talked about lies, transparency, the pump and dumps, but let's get into the next piece, and this is the bad. Now we finished the good. I got no more good. Now there's probably more good to be said there, but I think I summarized, at least my opinion, 3 of the biggest pieces of the good of financial Twitter and financial social media just in general. So to the bad, negativity. It's a lot of negativity. And again, when you're behind, an avatar, or when you're behind a fake profile picture, or when you're behind a no profile picture at all, I mean, you could say whatever you want. No one needs to know who you are, right? So there's a lot of that. And you could be a dick. You could be an asshole. You could go and bully people, if you want to even say that. Again, it's 2023, 2024 coming up. I mean, getting bullied online, yes, it's reality, it's real, but as you get older, you have the choice to just block it out, not look at it, and not give a shit, and not let it get to you, to a degree. Now, it will always get to some, but in my opinion, hey, people are calling you for this, that, like either you own up to the mistakes if you're not owning up to it, or you just have to block it out. It's just a part of social media, right? It is what it is. But on top of the negativity, like you'll find yourself in a very negative mindset sometimes, especially when things are not working right for the majority of people, right? Which is kind of how things work. Everyone gets bearish. We go up. People are pissing their pants. They're like pissed. They're getting fucked the whole time on the way up. They now get bullish. We start going down. Now they're pissed again. So it's easy to get caught up into that bearishness because of just what you're surrounding yourself with, or that negativity, I should say, not bearishness, because of what you're surrounding yourself with. Move on to the next piece, mentally taxing. I think this is a kind of a culmination of all of what we had said on the negative side. The mentally taxing piece, in my opinion, is very underrated, and in a bad way. People don't realize how taxing looking at negativity, looking or being lied to, seeing people winning, right? And then you're not doing as well as they are. Or they could be completely lying to your face, posting fake screenshots, Photoshop, whatever. It's 2023, dude. Like, if you post a P&L, I mean, no one, like, you can't necessarily believe that. Like, you really can't, unless you're watching someone live stream it, you know, live logging into their account. You really can't. So it's like, okay, cool. Like, you made a lot of money, or at least you say you did, but how do you know? There's no way to know unless you see someone do it live, right? At the end of the day. But seeing the negativity, right? Posting your thoughts and seeing people on the flip side, looking for that confirmation bias. Like, you know how long it took me to realize I'm a fucking idiot sitting here looking for people who are bullish or bearish or whatever about a given stock. I would just look up a given stock back in the day and I'd be only looking for people who were on my side. What the fuck does that do? It doesn't do fucking shit. Nothing at all. I'm looking for some other dumbass with no profile picture or profile picture of a fucking Wall Street bet dumbass sitting there saying, yeah, AMC's gonna go up. I mean, I wasn't actually an AMC ape kind of guy. I just saying, like, as an example, like, the fuck? Like, what are you doing? Like, that doesn't do anything. You're wasting your time. You could spend it somewhere else, A, or B, you can spend it actually doing relevant research to what might actually make sense or impact your trade, investment, whatever. Like, the mentally taxing part is not looked at enough. And I found that the more people I followed, the more shit was in my feed. And now on X, when you have the For You feed, holy shit, a whole new realm of confirmation bias and bullshit inside of this space. Because what's going to happen is they're going to show you people, or they're going to show you posts that they think you want to see. And if you have an overwhelmingly bearish bias on the market, guess what your For You is going to have? A ton of motherfucking bears. Okay? And the same thing on the other side. Is that helpful to you? Probably not. So when it comes down to it, there's a lot of goods, there's a lot of bad, but as long as you can understand the negative side, I think, and just do things and put things in place to minimize that. So for me, slash the follower, slash the accounts you follow, deep dive to the accounts that you do follow and say, okay, is there a value in this person? Like, what do I get from them? And does the positive outweigh the negative? Knowing all this. And then that's how I went through and said, okay, I don't want to follow this person. I want to follow this. I don't want to. And now, boom, now my feed's cleaner. At the same time, spending a lot less time. On my phone, I have an app that literally does not let me go into certain apps that I set unless I wait a period of time and then I specify how long I want to spend on the app. I do that, and now I go in with an intent, with a purpose, with a reason for the app, and I'm not fucking around wasting time scrolling, looking for that confirmation bias or bullshit that does not actually matter or will help me right in the future for whatever I'm going to the app for. So hopefully that was helpful, but that's the takeaways, the good and the bad from financial Twitter, Fintwit, now X. Hope it was helpful. I'll leave any links, resources, stuff like that in the description box. Make sure you subscribe, thumbs up if this was helpful to you, and I'll see you guys in the next one. Peace. you.